We're back again with yet another trade idea, this time on an interesting chart, STNE, Stone Co. This is a mid-cap software name. We think about US sector performance year to date. There's only 3 sectors that have performed better than SPY: communications, consumer discretionary, and tech. This being a mid-cap software name obviously would fall underneath the tech sector. US industries, there's only 5 US industries that have outperformed SPY this year as well: home builders, semiconductors, gold miners, software, and internet. So this does tick both of those boxes. We want to be buying the strongest areas of the market. In terms of market cap, now I did a little bit of a deep dive here on STNE, and STNE in particular is held majority in IWM, IWO, and IWN, all of those being the Russell universe, right? We expect that as IWM begins to recover, because right now IWM is pinned underneath the 200-day moving average with the regional banks really holding it down, names like STNE, as they break out into these stage 2 breakouts, will flourish. So let's actually go to the chart here. You know why we like it macro-wise. We built this thesis: tech, software, mid-cap, growth, etc. Now, we don't expect STNE to change fintech, which is what this particular company does, right? It's based out of the Cayman Islands. It sells a majority of its stuff to hyper-local businesses, brick-and-mortar businesses. We don't expect Stone Co. to go out and replace Square, right? But what we do like here is this year-long base after a prolonged markdown period. Now, this mark-up period was established off of the COVID lows, followed by a markdown period underneath the 200-day moving average, and has since then ranged for over 500 days. We love big, long bases like this. The larger the base, technically speaking, the bigger the breakout, we can assume. That's an old TA adage. We like the actual technical setup here. We look at the RSI and we go, is this thing ranging above 50 more so than below 50? Yeah. We would consider this, although it is slightly weaker because of the dip in March, a bullish momentum regime. The market, for whatever reason, does not want to sell off STNE below range low, and in this point, we're starting to peak our head above range high at that $12 area. We're trading north of the 200-day moving average. We would like this thing to start sloping more aggressively to the upside, but as of right now, it's at least not sloped down, so that's a check mark for our trading checklist here. With a 5.11 ADR, this thing will move. It is volatile, all right? And that's another thing that we want. We don't want to get stuck in names that are breaking out right now, like consumer staples, that they might run 5-6%, but those 5-6% moves are going to take 30 days. We don't want that. So this thing moves, and when it is going to break out of this 500-day base, 400-day base, it should explode. All right, so we're looking for a $12 move, or we're looking for a move over $12, excuse me, and we're going to do a conservative target at $15. Now, this is just based off of a very normal Fibonacci extension. We're giving a 3-to-1 risk setup with a stop underneath 1120, a breakout above that $12 area, and a profit target, at least number 1, at $15.13. It does help that it does correlate with the previous support low, which we can expect to meet some resistance there anyway. And if we do get up there towards that $15, we can obviously move our stops up and see how the trend continues from there and potentially target that $20 area. So we know what the play is. Above 12, we want STNE. Below 1120, we want to cut this thing, and we want to target that $15 area. It's very volatile, and it is in a bullish momentum regime. So look on the screen really quick. This is the play that we are targeting. This is either a shares or an options play. We like the July $15 contracts. Right now, they are going for about 55 cents. Open interest on these things is only 529, so you're not going to be able to go and load the boat on these things. But listen, with a 64.3 IV and a 9.8 IV rank, we love the fact that these things are cheap and we don't have to buy spreads to hedge against some sort of potential IV contraction. Odds are IV is going to expand off of this $12 break and those $15 calls. Not only do they match up with our price target, but they're also that 0.3 delta, which means these things are going to appreciate at a high rate once STNE begins to move. This is the exact trade idea that we have. If you like stuff like this, follow, like, take the trade with us. Let me know how it goes, and we'll catch you in the next video.